Hi everyone, and welcome to Inderes TV. Today I'm sitting here with analyst Petri Gostowski. Welcome.
Thank you.
Nice to have you here.
Nice to be here.
Today we're going to discuss about Sanoma. And you have also written a newly published report on the company, extensive report. So you're the man of the hour when it comes to this company. My first question, Sanoma. Why is it interesting at the moment?
I think Sanoma is really interesting due to the fact that it has gone through a very large transformation from a traditional media company to what I like to call a modern media company. That means a company that's more than half of its revenues comes from actually some other business than the traditional media business. And in Sanoma's case, that is the learning business. Additionally, Sanoma, I think, has a very clear M&A growth track behind them, and I'm sure they will be continuing on this track. And they are also a stable and a growing dividend distributor. So there's a few facts.
Yeah, you also mentioned the scalability and new possibilities in that area. So we could add that to the list.
Yeah, I think obviously growth brings scalability. If you think about the learning business, a lot of the learning business is distribution and providing of textbooks, so learning material. But the other parts are, for example, administrative and teaching platforms, which are digital businesses and which have scalability in them. So learning has some scalability in the business. And then also what brings scalability is the digitalization of the traditional media business. So going from print content to digital news obviously brings scalability, and the another scalable part of the media business is the digital advertising.
So we are now looking at two different business units, the media part and the learning part. So which one is bigger and which one contributes more on the bottom line?
So currently, if you look at last year's figures, learning provided 52% of the sales. So in terms of revenues, it's just a bit bigger. But due to the fact that the learning business is much more, it has a higher profitability, actually 2/3 of Sanoma's operating results came from the learning business. So you can say that the value driver definitely is the learning business, and it is bigger.
And looking at the country-specific business, the learning part is much more international than one would think when looking at it. Could you explain the market shares and in which countries they operate?
Yeah, definitely. So the learning business is international, whereas the media business is more local. I do believe that the learning business itself is local due to the fact that Sanoma operates in 11 countries, and basically they have their own languages and their own curriculum. So the textbooks and the material in them are pretty much local. But due to the fact that more and more digital platforms are used in schools nowadays, that has the international part built in, because you can take a platform from another country to other one, and you can just translate all everything to the local markets. So therefore it has international elements in it. And then also the lucrative part why Sanoma wants to grow internationally is that traditionally a learning market doesn't have very many suppliers. There's often one big supplier and then some smaller that bring additional supply to the market. There are very lucrative dominant positions to reach in the market, and another aspect that why they are lucrative is the fact that usually these curriculums are changed for many years. So basically, when you reach this dominant position, you have pretty stable and a good demand outlook for many years ahead. Then if we think about the news business, that is very local. In Finland, we have this our very own language that is not very well spoken outside of Finland, so that brings a local aspect to it. And then, of course, I mean, even though we read global news, but what we're most interested is the news, what happens here, what's important for Finland and the Finns. And then if you think about the other income stream in the news business, which is the advertising market, obviously many of the Finnish companies that are Sanoma's customers, advertising customers, they are willing to reach the Finnish people because that's often their biggest customer segment. So that's also one additional supportive factor of why it is a local business.
Yeah. And here you mentioned already some of the income streams in the media part of the business. There was the media and the advertisement.
Yeah, so basically you can divide the media income streams into three. There's the content that is mainly news content, but more and more these days there are other income streams, for example, video on demand services, podcast services, radio, just to mention a few. Then another one is the advertising, and Sanoma has a third, the other income stream. It's called other. It consists of a festival business, and then there's a few other minor income streams. But I think the best way to dig deeper into the income streams is to divide it by these three.
Yeah, but if you look at Sanoma historically, could you say that the risk potential has changed? Because as a traditional media house, you're much more dependent on the economical cycle at where people are consuming describing this entity at the moment, there are a lot of different, more defensive and scalable options in terms of cash flow.
Yeah, I think you can basically look at the transformation of the risks maybe in two phases. Historically, especially the media business has been rather dependent on the economic cycle due to the advertising business. Obviously, in a very good economic situation, advertising grows because companies are doing well and they try to grow faster. And then when the economic downturn comes, they would spend less on advertising, and that's what brings the volatility to the advertising market and to the media business. Then we've seen the huge transformation that has come through digitalization. So that's been another very volatile phase for media companies because basically print demand started to decline very rapidly, and then basically you get the negative economies of scale when your revenues are going down in print. So it was a challenging phase for many media companies. But now that especially Sanoma is pretty much, they've already done the transformation. So I think most of it, I think their risk profile has changed due to this fact. And then another fact is that you have the stable and predictable learning business, which I'd say in the context of, for example, the stock exchange, it would be one of those businesses that has a smaller risk profile, would be in the lower group of, if you put out the companies in terms of their risk profile.
So what would be the strategy going forward for Sanoma? There have been mergers, acquisitions, and kind of streamlining, but also bringing in new elements to the business.
I think, as said, I think Sanoma has pretty much finished the transformation. I mean, the majority of it's done. It's clear what Sanoma consists of these days. I think now the next steps in their strategy will be continuing to grow the learning business. That is basically M&A growth, because it's very very tough or not even impossible to go to a new market and start organically to grow. So basically you want to acquire businesses that are market leaders in their regional markets. And then it's also the traditional taking the most out of your current businesses, developing them, and especially controlling the still ongoing transformation in media from print to digital. Although Sanoma has done a lot in this area, it's still an ongoing transformation. Yeah. And basically you transform the business at the pace that the customers want, because there is still people who do want to read the print media. So basically you're letting the customer to lead the pace of the transformation.
Yeah, so it's an ongoing process.
Definitely, yes.
But how is Sanoma doing financially today? Mergers and acquisitions aren't cheap, and they also cost in terms of integration.
Sanoma is very well positioned currently. I mean, if you look at the past acquisitions in the learning business, they did the Santillana Spain acquisition a bit over a year ago. So that integration is well done. They're finished there. And then in the media business, they did a bigger acquisition about 2 years ago. This integration has been also done. So not too much effort is being put into or is not going into integrations anymore. And while they've been working on these integrations, their solid cash flow has brought down their leverage. So basically, Sanoma has said that they see them having 300 to 400 million euros headroom for new M&A, and I definitely agree. They can easily use 300 to 400 million for these acquisitions. Just, I mean, depending on how much they want to have leverage in the business is what will limit in the end the amount of headroom they do have for acquisitions. But yeah, I'd expect them to continue the acquisitions. Yeah, at least in the next 12 months, probably even earlier.
Okay. Yeah. So what about Sanoma's dividend policy? The investors are always interested in that.
Yeah, I think you can start by looking at Sanoma's capital allocation. I mean, they have two clear ways to allocate capital. One is the M&A, the growth, especially in the learning business, and the other stream is the dividends. Sanoma aims to pay 40 to 60% of their annual cash flows as dividends, and they aim to grow their dividend annually. And with the profitability of the company, the expected earnings growth, and the cash flow growth, I see Sanoma capable of growing their annual dividend while they're also allocating capital to M&A.
So you see it's on a sustainable level?
Yeah, definitely.
Yeah. Could you say some words about the valuation and the current recommendation for Sanoma?
Currently, we have an accumulate recommendation. I see as Sanoma's valuation rather lucrative, especially due to the fact that the stable and low risk profile of the learning business you would expect them to be valued at a higher multiple. But then, in addition to the upside potential I see in the multiples, your expected return will also compromise of the solid dividend. So basically, these two components, I think add up to a very good expected return for the next 12 months.
Okay, we have mentioned a lot about the potential of the business, but what about risk in the short term and long term risks?
Yeah, I think in the short term, everyone's talking currently about cost inflation, so that would probably be one that comes into my mind. Although I think in case of Sanoma, that's kind of more limited to what happens to the availability of paper and then what happens to people's wages. There aren't very many cost elements that are very volatile or very, very big part of the cost structure. So yeah, cost inflation is a risk for I think everyone currently, but maybe not as bad for some as for many industrial companies, for example. But then if you think about the big picture, how the growth is built on M&A, obviously all the risks related to M&A are the main risks in the long term. So there it is, paying too much too much on the company you acquire, having issues with integrations and cultures and consolidating the company into one whole Sanoma and these kind of risks. So the majority of the risks are related to the M&A.
Yeah. Okay. I would say this is a nice package of Sanoma. Thank you for coming.
Thank you.